It was unbelievable, people. I have never seen more interest in insurance till Ron DeSantis came out and absolutely dropped that bombshell that the insurer of last resort for all of Florida heading into a hurricane season was on its last leg.
Governor Ron DeSantis is raising more questions about the state's insurer of last resort, Citizens Property Insurance, ahead of what's expected to be an active storm season. I'm Jessica Bruno, continuing our coverage of the state's coverage collapse and sky-high home insurance premiums. The governor recently told CNBC the state insurer is not solvent, and having millions of people insured with Citizens when a storm hits would cause problems for the state. This comes as Citizens is shedding thousands of policies and private companies are taking those over, often at a similar or a higher rate than Citizens.
Home insurance has skyrocketed by a whopping 130%.
It's very scary, but what do? It's crazy, just crazy.
Well, I want everything for my mom. Don't make me cry.
The year with the same old problem with home insurance. The costs are going up, and state leaders say their reforms could take another year to deliver results, with no guarantees, by the way, that they're going to pay it all off.
When you moved to Florida, were you aware of the property insurance crisis?
No, her property insurance went up $1,400 a year.
It's because nobody else will write a policy. We have no other choice.
The governor responding to those concerns today about this insurance crisis with what really sounded like a wish upon a star moment, that we don't get hit with a major hurricane.
Sadly, you do not have to go very far in the state of Florida to find a sea of stories about retirees, people that have moved here recently from the north during COVID, who are now leaving the state, turning around, selling their home because they cannot afford the high cost of ownership. And particularly, the top villain is homeowners insurance. Even all the New Yorkers and people from New Jersey, all the folks that have moved here with lots of money in their pocket that were fortunate enough to pay off their homes, you can see a sea of those types of interviews where people who own their home free and clear are now having to do what's called going bare, or going without insurance by choice because of the stranglehold of the cost is not permitting them, even with a paid off house, to keep it. And even people that are in seemingly this enviable position of not having a mortgage, they themselves are one catastrophe, one hurricane season away from irreparable damage from a storm, of which they themselves, being in the position of self-insuring, might be skipping out on insurance payments, but might have to bear the cost themselves of wind or flood damage from a storm. Now, in this video, I'm going to give you the most comprehensive understanding of where we are now in 2024 going into 25. So that if you live here now, what can you expect? Are things going to spiral worse, or is there in fact light at the end of the tunnel? And more importantly, if you're retiring in some other state outside of Florida, considering this for your next home, pay close attention, because not only am I going to share with you what the future looks like from here, as we are now closing in on nearly 2 years since legislation passed by Ron DeSantis in the state houses of Florida have completely changed the laws to hopefully solve this crisis. In this video, I'm going to share with you how the climate is changing right now, and even those solutions themselves might have created glaring traps for all of us that live here now that you need to pay close attention to, that as even things might seemingly be getting better on the cost front, there are some pitfalls you need to be aware of. But first, I'm going to digress and refresh our memories as to how exactly we got here. What created the problems in the first place, so that we can understand that the changes that were passed, if they will actually be beneficial at all. As I break into this critical update on the insurance crisis, do me and the channel a huge favor and smash that thumbs up button below so that as many people as possible can see this critical update on exactly what's going on in Florida insurance.
Record high mortgage levels are starting to take their toll. The mortgage rate is at 14.75%.
Ask not what the Great Reset can do for you. Ask what you can do for the Great Reset.
But how do we get here? Let's flash back to the beginning. Back in 2020, as the pandemic was unfolding, the average cost of insurance was around $1,980 per year. Fast forward to 2022 and to 2023, and that number was now around $4,500 per property for insurance on average. Now, depending on which estimate you look at now, in the past year, we are now hovering around the $6,000 a year mark on average for insurance. Their cost for the rest of the country is around $1,700 to $2,000 per year.
This is hideous. I'm paying $1,000 a month for increases to insurance. We're like, okay, we just might have to leave.
Suzette Bertini did not want to talk with me on camera, but she did share her story over the phone.
My husband and I bought our property on Lake Leda in Tampa in June of 2015.
This was her insurance premium with Olympus 7 years ago, $1,897. It then went to $2,500 in 2020, more than $4,500 last year, and this year, $9,031.
So, Jared, what you're saying in Florida is that we have multiples higher insurance than everywhere else in the country. Absolutely. And it's ballooned at a faster pace than anywhere else. Now, for sure, we've had some epically historic storms that have absolutely thrown fuel on the fire, but the flames and the smoke were already coming out of the building before the COVID pandemic. And ultimately, the insurance crisis has unfolded based on two major culprits that were left unchecked and never solved for many years coming into this season.
With fraud, Tarek? That's correct. The assignment of benefits, or the AOB, is a document that you may be asked to sign when a contractor, like a roofer, proposes to do work at your house. Contractors say assigning them your benefits help them to quickly complete the job without involving you further. But Jimmy Petronas, the state's chief financial officer, says the AOB exposes Floridians to criminal deception.
You know, I've got a leaky roof. I've got mold in my ceiling, my office wall, my bathroom, and I can't fix it myself without breaking the contract.
Marine Corps veteran Eddie Albert told state investigators that his insurance company wrote roofing contractor Kinnecor, LLC, a $9,000 check, and Kinnecor cashed the check the next day and was able to deposit without Albert's signature. He says Kinnecor also billed his insurance an additional $4,500 for a mold inspection that was never approved. Half a year later, the mold is still here. His roof hasn't been touched, and he's legally bound by the AOB agreement.
The number one problem listed is traced to fraud by contractors extorting money from the insurance companies, commonly known as AOB fraud or assignment of benefits fraud. Now, let me give you a typical scenario to walk you through how this would go. A storm would come through a general area, okay? Now, imagine a neighborhood like the one I live in right now. The roofs in this neighborhood are only 11 years old. Roofing companies, I've been told, have software to actually tell them and identify which storms may have thrown off hail and wind damage in a specific area that might qualify for a roof replacement. Now, in Florida, to give you an idea, a roof replacement maybe for an average size house is probably going to be anywhere from $14,000 to $21,000, something in there. And that's the middle category. Bigger homes, they cost a lot more than that. We have another item in Florida called the 25% rule. That means we have rules in our insurance process that if there is more than 25% damage to a roof, the entire roof has to be scrapped and replaced. And all of that cost gets snowballed into the cost of everybody else's insurance. You'd scratch your head and say, well, Jared, if I've got a roof that's only 8 years old and we're having to replace a quarter section, like, why wouldn't they just do that? Well, the obvious claim is there's a structural problem because this newer part of the roof isn't as good as the older part. And beyond that, it's unsightly because the roof colors are a little bit different than the existing roof. It's not going to match, so on and so forth. Now, the roofing contractors would come in and say, hey, you know what? All you need to do is sign all of your benefits over to us, signing what's called an AOB form. They would then put themselves as a roofing contractor in the driver's seat to negotiate any types of costs that they deem necessary directly with the insurance company. Obviously, this scenario flips it on its head. If you were just to give the homeowner a specific sum of money and then make the homeowner from the insurance company giving them cash and say, hey, go shop for the lowest paying bidder. Much different situation in that circumstance. But with this, it's one contractor with direct access to negotiate whatever he or she deems necessary from the insurance company. And they would do this hundreds of thousands of times per year. So take these 11-year-old roofs where I live. A storm hit here in February. A roofer shows up and says, hey, we can do an assessment on your house. You might get an approval for a new roof. What they're saying is we might get your insurance company to pay us a lot of money to change your entire roof, even though this roof has probably 10 to 15 more years of life, aside from some specific hail marks. The homeowner would then sign the collection rights over to them. Now, the roofing contractors got really good at tappering the entire neighborhood. Signs would go up saying big green mark. In fact, I'll show you my neighborhood right now. Sign after sign after sign, house after house in this particular neighborhood, completely re-roofed time and time again. I would tell you there's probably $500,000 in roof expense just in my neighborhood alone in the past 3 months after one single storm that most homeowners did not originate these calls. These people did not have leaky roofs. They had a roofer go to the properties, knock on the doors, and start mailing letters and say, hey, we changed your neighbor's roof. They got an approved job that says, hey, we're advertising that basically all you have to do is get a roof for free. Now, if you watch anything on YouTube from the roofing and the general contractor community, as I have, when it comes to these AOB tricks, they will all say, oh, it's not us. It's the people from outside the state coming here and running these games. I have a letter right here from that same vendor that you saw on 50 different signs in my neighborhood, and they're right here, downtown Orlando. And ultimately, what's going to happen is all the cost in this zip code that's being extorted from these roofers to rip off and replace all these roofs could likely just be repaired at a fraction of the cost. So the assignment of benefits and general contractor fraud, particularly with roofing, but this happened with all kinds of other costly repairs as well, shook down the insurance companies. But that was just point number one. The next thing was attorney's fees.
With worries still rippling in Florida after Farmers Insurance announced it's dropping nearly 100,000 policies, conservative radio host Howie Carr asked Wednesday how DeSantis is handling things. The White House hopeful responded by saying recent reforms cutting incentives to sue insurers need more time to work, but predicted Florida would see relief.
It now is more economical for companies to come in. I think they're going to wait through this hurricane season. Knock on wood, we won't have a big storm this summer.
So in the state of Florida, litigation costs are another major culprit. Florida has a notoriously high rate of insurance litigation. Listen to this. In 2021, Florida accounted for a staggering 81.25% of all homeowner insurance lawsuits in the United States. We are less than 9% of the entire U.S. population, yet over 81% of property insurance lawsuits happen in our state. So listen, folks, billions of dollars would come out of the insurance pockets into the attorneys. If you go to a famous restaurant in town and you see big trucks and beautiful cars out front, you have contractors and attorneys doing very, very well. And I'm not knocking all contractors and attorneys. Listen, if you need a good contractor attorney, you're going to be glad you found one. So I'm not knocking the profession. That's unfair. But I am telling you that many of them exist not to litigate, not to defend people in court, simply to shake down insurance. And you attorneys should applaud that that's the truth, because you yourselves do a phenomenal job. And this isn't something you want to be associated by. So ultimately what happens is you got to understand the interface with insurance companies in Florida. It's not just Sue and Paul homeowner or whoever just calling and say, I got a problem. Can you come in? Oh, they give us some money. We shop, we pay, we get a check. No. Contractor comes in, goes direct to the homeowner's pocket, controls the access from the insurance payouts, goes directly to the insurance company as a professional grinder of the insurance company for the contractor's sake. And yes, of course, this is only the bad ones from out of state that do all this nonsense. And then if they don't get what they want, they have the attorney on standby who knows I can go after them and get this thing pushed through, because it was such an unfavorable environment for attorneys for how the fees went. So insurance companies, by and large, would just pay and pay and pay. They would pay anybody in the realm of reach, because ultimately they knew, okay, we're going to go into a losing legal battle. And understand the way this worked for the insurance company, it was a one-way payout on legal. So what that means is if someone sued the insurance company and won, the insurance company would pay their legal fees. So on the other side of that, if someone brought a frivolous lawsuit against any insurance company, and you got to imagine when 8 out of 10 are in our state, there's got to be some frivolous lawsuits in there just by sheer volume. That why are we suing them all the time? The reality was, if you sued the insurance company and you lost because your lawsuit was junk, the shoe wasn't on the other foot where you owed the insurance company's legal fees. So attorneys were like, let's go all day long. And hundreds of thousands of lawsuits were filed. And that number just kept climbing straight into COVID, exacerbating the cost of insurance. As you can see with this 25% rule where this roof overhauls are coming, neighborhoods all across the state all the time. And this isn't the same in other states. Many other states, if you have a roof damage, you get a repair, and repairs aren't super expensive a lot of times. By the way, legislature has been trying to battle these things for years. At the end of 2022, many reforms came in place, upending the assignments of benefits frauds, upending one-way legal fees. These concerns that snowballed the cost of insurance were finally shut down. And by the way, would you have guessed that before the end of 2022, when DeSantis finally signed these actions into law, did you know that in the state of Florida, there have been similar bills over the years prior, even previous to COVID, that we've tried to get passed through the State House of Congress that couldn't make it through the State Senate? And you know why? It was voted against by party lines. It was voted against because there was enough votes along party lines stopping these loopholes from being closed. I will not, for the sake of comment sections and people crying, because everybody's tribal. Nobody wants to point out and say, hey, you know what? It really sucks that this particular party kept voting down party line every single time these types of issues were brought up, but they were. And it just so happens that said party going into 2022 lost a lot of its seats because of the unpopularity of the governance of same party, probably during the COVID era. And it was just enough to solve the problems. Otherwise, by all means, they'd probably still be here. And the train would probably still be barreling down the tracks with no change or end in sight. But I'll digress for a moment because as we head into 2021 and 2022, you need to understand that there are three things that absolutely set fire to this problem. And what happens next nearly collapsed the entire system for Florida. The storm that nearly collapsed insurance, COVID. As we go into COVID, we had massive monetary policies and stimulus unfold that introduced a ton of capital. Buying power for the average American goes through the floor. And guess what? The cost of repair, the cost of re-roofing your house climbs according to the Producer Price Index from 2020 to 2023. Cost of repair, cost to build, cost to roof, 50 to 60% more cost to do any of these things. Now you add the fact all this rampant expense is already in the system, and now the cost of all those things leaps off the charts, but the insurance companies have been collecting in a few years prior at much lower amounts. They're projecting costs of these repairs to only be a certain amount, and all of a sudden they've climbed 50, 60% overnight. And yet we still have people that go on the news, which I get it, it's sad. They're sitting there saying, oh, my insurance is climbing by 40 or 50%. That's how it works. If the spending power goes down, our central bank's introducing all kinds of monetary policy that basically your dollar doesn't go as far as it did. All of a sudden, guess what? Everything goes through the roof. Besides the cost of everything going through the roof, Hurricane Ian hit. Hurricane Ian caused in the neighborhood of $113 billion in damage. It was one of the most expensive storms in the entire U.S. history, not to mention Florida. And it couldn't have come at a worse time because the repair of everything, 50 to 60% higher. It was a match that absolutely nuked the system. Pre-COVID, I think we had between 40 and 50 homeowners insurance companies that would give you insurance for your home. Going into 2021, as everything started to get chaotic, nearly 30 of only 40 insurers that we even had available at that time were all on the list of regulators being watched closely for potential insolvency. Nearly 30. I think the number was 27. Out of this 27 on the watch list for insolvency, 6 of them went completely out of business. And keep this in mind, folks, the monster major insurers who are really only partially exposed to this one state because they do business in all the other 49 states and are less worried. I'm talking AAA, Progressive, State Farm, Farmers Insurance. All of these major carriers made significant changes to the business they themselves were writing in Florida because of this problem. Some stopped writing new policies, while others completely exited the Florida market altogether. Now, as Floridians were being dropped, as the window got even smaller for people to gain any insurance at all from the existing available insurers that still were writing policies, not to mention the big carriers dropped, many of the smaller carriers stopped doing business. It was starting to get very tricky to find anyone to write insurance at all. I remember 4 or 5 years ago, already having to use Citizens Insurance because no one else would write the policy. And we're talking decent houses. I mean, these aren't beater, scary houses full of high risk sitting around the ocean. For those of you who aren't an expert on the issue, Citizens Property Insurance Corporation is a state-run insurer in Florida designed to provide property insurance to homeowners who cannot obtain coverage through the private market. This company serves as the insurer of last resort when no one else will do the policy. Now, as you can see, coming into COVID, if you imagine Florida as like a patient and they're going to the doctor and they already had a little bit of cancer. The cancer was already there. It's kind of spreading, but it wasn't going too fast. And then imagine locking that cancer patient into a house where all they can eat is processed food, McDonald's, and cake for about 2 years straight, and the illness within the system absolutely exploded to critical mass. And this is exactly what happened in Florida as we progressed into Hurricane Ian and into the crazy inflation that was the COVID era monetary policy. As many major and mid-sized brands completely stopped writing policies altogether or left the state, many folks in Florida were also completely dropped. They lost coverage altogether, and anyone that has a mortgage in the state cannot go bare. They cannot choose not to have insurance, so they would default into Citizens. And here's where the next drama mounted. Now, as a result, as of late 2023, Citizens has 1.23 million policies in force. And this is a decrease from a peak earlier in 23 of around 1.4 million policies. Now, a year prior, Citizens had around 1.18 million policies. And we know this is happening because Citizens made a massive push to really get people off of their insurance. they did not want to carry so many people, and they did a depopulation effort through the end of last year. Now, if you are with Citizens now, they are admitting that, hey, you know what? You do not have to stress. We're not going to be putting out a bunch of depopulation notices this year as we head into hurricane season, but those might be rolling around on the back end of hurricane season come November, December, and hopefully by then you may not need it. But I'll never forget how eyes rolled and how people freaked out about insurance in a way that I've never seen before. Ron DeSantis in March of 2023 said that if there was a major storm, that Citizens Insurance would be in a major debacle in order to deal with it because there were so many people depending on the one insurance company. Citizens has since said, hey, there's no reason to worry. Since then, they themselves have purchased what's called reinsurance policies, which is basically insurance that protects the insurance companies if they start to take on massive losses. Part of their budgets of what we pay them out of our premiums goes into those policies to keep them secure. And I wonder if reinsurance companies themselves purchase reinsurance policies to protect their interest and being able to pay off the insurance company going down. But I'm sure they'll be fine, right? But as it stands, on the 30-some operational insurance companies, only 2 this year have come up and said that they are going to have hearings because they're jacking the rates up by a significant sum. Now, as we look to what's next and you weigh out the news of the day, what's good and what's bad, you can tell that things are starting to shift. I will say on the entire climate as a whole that there's more signs that the light is at the end of the tunnel, and it's a process of just having the system shake through the new laws. Here's what I mean. So far this year in 2024, only 2 companies have had hearings saying they need to have significant approvals to increase rates on their policyholders. At the same time, 10 other active insurers in Florida said, hey, we're holding stable. We're not putting any increases in place whatsoever at this time. On top of that, 8 new insurers have come to the market. So that is a great sign because ultimately, for the past 2 to 3 years, we've been a climate where insurers are leaving. The market's getting narrower and narrower, and there's less competition for your business because people are fleeing the state and don't want to insure here. But I can tell you this, with 8 new insurers, you need to be careful because they're not battle tested. As I look at that situation, I see 8 companies that I've never heard of before. Most all of them are backed by other insurance companies, and they've had to meet a bar of regulation in order to be insuring parties in Florida in the first place. We are all assuming that they're collecting enough in policies in order to remain solvent if we take a big hit of a storm. Now, I would tell you, for one, if I were in a high risk area on the coast where I'm at risk of a storm costing me 50, 100 grand or more, I would be a little bit more leery of a company who does not have a track record unless I did a lot of research. And anyone in that case wants to take those kinds of steps on a case-by-case scenario. But I will tell you, if I'm in a low-risk area, I have a mortgage on my house, so I'm forced to buy insurance, and the likelihood of me actually using that insurance is incredibly low, then I might give one of these new insurance companies a look to see if I can't possibly save a lot of money annually lowering my insurance costs with them. I will also say that of the data that I can get my hands on, that based on the new laws, there has been a noticeable impact on the volume of insurance-related lawsuits being filed in the state. So the reforms aimed at curbing excessive litigation seem to be taking hold. But for now, especially in the very high-risk areas, there is a major gap. You could have an area of town where someone owns a marina or something near water, and they might get a $40,000 a year bill. You heard me right, nearly $4,000 a month just to carry insurance to be covered up to maybe $250,000. And not to mention, too, the amount of people that just want to buy a house in Florida and can't afford it. When you add the difference of what it costs to buy insurance in Florida over what it costs the common person purchasing a house anywhere in the U.S., just the extra money that has to be diverted towards insurance costs cost people $100,000 in buying power by comparison. That's a hit to our property values. Think about that every time a hailstorm comes through and 50% of your neighbors all get brand new roofs as a result, instead of just a repair at a fraction of the cost. All in all, the recent reforms in Florida are showing promising results. Again, 8 new companies have entered the market, bringing fresh competition and stability. And despite past challenges, only 2 companies are entering significant rate hikes, while 10 others, again, maintaining stable. Legislative changes have reduced legal costs associated with the fraud and litigation, and this has cut defense expenses from $1.6 billion insurers had to pay in 2022 down to $739 million by 2023. And that's going to come down significantly more because you got to remember, at the end of 2022, a wave of lawsuits, knowing these laws were going to change, had hit the courts. So I expect that in 2024, you're going to see lawsuit costs diminished greatly after that. Additionally, the state insurance market saw a significant reduction in underwriting losses from $1.8 billion in 2022 down to just $191 million in 2023. Think about that, nearly $2 billion to just under $200 million a year later. All of these improvements indicate a positive shift is coming in Florida. Now, I will tell you, if you are considering buying a home, some things to watch for. If you're buying a home that has largely older mechanicals in the home, such as heating, roof, electrical, plumbing, all those things, even if you're in a low risk storm area, meaning there's not going to be a tidal wave, there's not going to be potential for flooding and major wind damage like you would see on coastal areas, even those homes inside the state that are maybe older, year built is a little bit older, those pose a risk of, even in the current climate, being priced a bit higher. So simply put, the newer the home, the better off your insurance is probably going to be. For sure, your utilities are going to be lower the newer the house is, but don't rule out an older home that's been completely remodeled. If you've got an older property and they do a 4-point inspection, they check all the systems of that home and everything's been revamped, then you might find yourself in a very competitive situation for good rates across all of these carriers. So in summary, light at the end of the tunnel. That's how I see it. I think we're probably in a year to maybe 18 months of stable before we actually start to see competition reducing the cost of insurance once again, and hopefully forever putting a nail in the coffin to the crazy insurance crisis that we just experienced. Let me know what you're seeing in the comments below. And if you're not already subscribed to the channel, consider subscribing so that you can know what's going on in Florida as it relates to real estate. We'll talk to you real soon.